right now, some people say the stock to flow is roughly around 65. In other words,
Yeah.
we have a 65-year supply of gold in stock.
Annual mine supply is 3,300 metric tons, and the above ground stock is 195,000 tons, which gives you roughly a stock to flow ratio of 60.
Got it. Now, do traders of gold and gold analysts, do they actually look at stock to flow in order to gauge the price that gold is going to or should be at as a
No,
metric?
no, no. The fun is that they look at, and this is something that is that I know you want to talk about Bitcoin and this gentleman called Plan B, which is also a Dutch resident by coincidence. They think that the stock to flow creates the price, but that's not true. The price of everything is set by supply and demand. So supply, yeah, you can, it's all this stock to flow talk is about supply. But if there is no demand for something, the value is zero. I mean, if you create, let's say, if you would build a building and you would, put like $1 billion in it to marble, whatever, bathrooms,
Mm,
but there is no buyer, the value is zero.
right.
Right? This is
Right.
this is basic economics. It's called the subjective theory of value.
So
So people buy gold.
what is stock to flow good for in the gold market? What do people, why do they measure it? Why do they care? Does anybody care?
We do care because the funny thing is that because people have demand for gold, and there is so much above ground, and there is so much that's coming out of the ground every year. If demand rises compared to supply, if demand outpaces supply, and the price goes up, it becomes more profitable to get more gold out of the ground. And in this way, this is like a self-regulating system, you can say. In this way, the stock to flow ratio is kept more or less at a constant. But not because people look at the stock to flow ratio, it's because people have demand for gold and they look at the price and its purchasing power, and they look at all sorts of other assets like stocks and bonds and what central banks are doing, etc. Also of importance now is, for example, the oil price is now very low. So with a very low oil price, it becomes much more profitable to mine for gold. So everything in the economy plays into this. It's not just as with Bitcoin, what some people think. Oh, you have a mathematical model and that's it. And every type of money is just a social agreement. It only has value because we all believe it has value and because we have agreed it has value. I mean, if I do a job for you, you pay me $50 and I accept it because I believe that tomorrow I can spend it. So it's all just fictional, right? Every
Right.
money is backed by trust. That's it.
What year did you first buy Bitcoin?
I bought my first Bitcoin in 2011, actually, at $25. I bought 5 Bitcoins and I lost them because at one point my computer was a bit working not so well. So this technician came in and he said, yeah, oh, I see you have some Bitcoins in a Bitcoin wallet. Yeah, no, those, there can be a virus in them. So he threw them away. And then, yeah, it's funny. 5 Bitcoins. And
Are you
then in
sure he threw them away?
2015,
He didn't send them to himself?
I'm still thinking about it. No, they're gone. So maybe
If that
we
computer
should
guy
make
is now living in a mansion somewhere.
oh, these crazy stories.
It's
But then in
interesting because
2000,
my brother bought Bitcoin he bought 10 Bitcoin when it was $1,
oh yeah,
and he held it, I think, at Mount Gox or one of those early exchanges, and
right.
the exchange got hacked and he lost his 10 Bitcoin. So,
Yeah, yeah, you
but
have the
then,
most. I don't know if I'm allowed to swear, but the most
yes, you can, please.
fucked
Fuck yeah.
up stories about people losing Bitcoin, and oh my God,
Right.
yeah.
What made you buy it? And what made you then, you eventually, I think you told me you sold in 2017 when the prices, I think, were pretty crazy high. What was going through your head as far as like, why did you see any value in this digital
Yeah, so I just
currency?
told I bought Bitcoins and then I lost it a year later. I bought it because I was really interested in economics after the great financial crisis of 2008. And I was interested in gold, and then suddenly this new currency came up, and it started to go up in value. First it was 1 cent, and then it was $2, and I was like, oh damn, I missed it all. Uh, and but it was very interesting. I thought, you know what? I was also investing a little bit in gold and silver. You know what? I'm going to buy a few of these bitcoins as well. You know, because maybe this will be the future. I mean, what I like about Bitcoin, of course, is like it's like a bottom-up invention. It's not a top-down thing from the government, right? So it's everything that is created from the bottom up is very or functions very well. And
Gold itself is a bottom-up invention.
of course, yeah, yeah, we start to use it as money because the market was in demand for it. But anyway, yeah, then in 2013, so I lost those bitcoins in 2013. I saw the price go up again, and it was at 40 or $45. And I thought, those 5 bitcoins I lost, I'm going to buy them again now because I want to get back into my position. And so I did. And then, and in 2017, I thought this is, there's this famous story. I don't know if you know the story
The
about
tulip mania?
No, not the tulip mania, but about a stockbroker. And he worked on the stock market in New York, and he went out of the stock market at the end of the day, and he had his shoes polished at a shoe shine man. And the shoe shine man said to him, "Oh, you have to buy these and these stocks because they're very high now, and they're going to go up a lot more." And the next day, he sold all those stocks. This is just the basic rule of investing. If the cab driver or your aunt at a party is going to tell you about some kind of asset that you have to buy, you have to sell it. It's the
Right.
peak, you know?
Right. Exactly.
So in 2017,
Especially if it's an esoteric asset. You can imagine people talking about, you need to buy derivatives. Really?
yeah,
Like,
yeah, yeah.
okay. When the guy
No,
who's
but
packing my groceries is talking about derivatives, I'm like, okay.
okay, this is weird. Yeah. I don't think he's a professor. No, but in Amsterdam and probably all over the world in 2017, I could not walk into a bar in Amsterdam and people would start telling me about Bitcoin and whatever. And I was like, I'm going to sell. I'm going to sell all of it. So I sold all of it. And that was the end for me. And I still think it's a very interesting project. I'm not against the Bitcoin, but yeah, I just happen to not own any of it.
What do you think about the stock to flow model that Plan B, who is a fellow citizen of the Netherlands, they're Dutch as well? What do you think of it? Do you think it's bullshit? Do you think there's anything of value there?
Well, I think what he showed is really nice that the price or the market cap is more or less correlated to the stock to flow curve, right? He says that the stock to flow model provides value, and that's of course not true. Maybe you and I know what the stock to flow model is of Bitcoin. It's like every 2 years the new supply is being halved, right?
Every 4 years, sorry.
Every 4 years, sorry.
Hmm.
I don't know it exactly.
Yeah.
So now there are 17 million or 18 million Bitcoins, and
Yes. And so what
every
happens is
year,
that every 4 years, the amount of reward that the miners get is halved. And so in May 11th, I think it is, of 2020, they're going to go from 12 and a half Bitcoin reward to 6.25 Bitcoin
yeah,
reward.
yeah,
And that really raises the stock to flow ratio dramatically
hmm
and almost overnight, effectively. And because the stock to flow ratio goes up and will at some point pass gold, the stock to flow ratio of 60 something, that Bitcoin will become incredibly valuable as a result.
yeah. So that is what he writes in his article, in his basic article. He wrote a few others. So what he does is he says the value of Bitcoin is derived from the stock to flow calculation, actually. But I told you in the beginning of this conversation about the subjective theory of value, and that is that the value of everything is set by supply and demand. So the whole stock to flow model is only about supply. But what about demand? So if I would tell you that tomorrow I would launch a new cryptocurrency, and the halving would not happen every 4 years, but every day, right? So we would start off with, so to say, a million of my cryptocurrency. and the stock to flow ratio would not go up very rapidly in a few years, not in 10 years, not in 20 years, but in 2 weeks, would it, be worth trillions of dollars?
Right.
I don't think so. This is not how economics works.
Right.
There has to be demand for something.
Right.
So the fact that the correlation is very remarkable, but there also have been other correlations between the price of Bitcoin or its market cap and, for example, the usage of the chain, how many transactions on the chain. For example, there's a guy called Charlie Morris, and his company is called ByteTree, and he has a different theory about the pricing of Bitcoin, and he looks at the intensity of how the blockchain is used, and that also has a correlation to the price. It's such an amazing invention that I hope it will go up, because I think there is just I think also there's demand for it, but the price is from the demand and not only the stock to flow ratio. The demand is from how we can use it as money or something else. That will determine its value. I see similarities between Bitcoin and gold, and I hope they can go up together. I mean, anything but this paper money from the government, which is kind of destroying the economy now.
I was looking at a chart that you sent me, and in the video we'll show the chart, but basically you showed the stock to flow ratio over the last 120 years.
Yeah.
And it's kind of been going, has this wavy pattern. Now, if we overlay the price of gold on top of that, you see very little correlation between the two. And that's something that I think Plan B in his thesis kind of leaves out. I mean, it would have been much more powerful if he says, look at the price, the stock to flow of gold goes this way, and the price of gold follows it in tandem, but it actually doesn't. Correct?
No, but it has a lot to do with that the price of gold itself is meaningless over 100 years, because the price we are accustomed to dollars, but a dollar 100 years ago could buy you a lot more than today. So the price in dollars doesn't tell you anything. You have to convert it with inflation numbers to the purchasing power of gold, right? So it becomes a little bit more complicated. Now, if you look at Bitcoin exists from 2009, so that's only 10 years. So not a lot of inflation, in consumer prices has happened. There has been a lot of asset inflation, but not like with bread and bicycles. So it's quite easy for Bitcoin to just take the price, the dollar price, and make mathematical calculations and look at correlations. Whereas with gold, which has an, let's say, 6,000 year history, you really have to look at the purchasing power. I mean, an ounce of gold in, let's say, 1900 was $20. But just the price in dollars doesn't mean a thing.
Right, right. No, I understood, because I remember seeing somewhere in my research that they showed you, I'm just exaggerating here, but 1 kilogram of gold could buy you a car, a really nice car, in 1960. And it can still buy you a nice car, or even a nicer car now, or something like that. It's the same, something like that. I can't remember the exact thing, but
this is about the purchasing power of gold, and it has
right.
actually increased in the United States. I can send you a chart if you want. Since 1971, the purchasing power of gold has increased, and this is what I talked about in the beginning, because there's been so much monetary acceleration in terms of debt increase, credit expansion, financialization. That a lot of wealth has been created, and gold has kept track of that as the Polaris in the monetary system.
A lot of times, if you talk to Bitcoin people, there's like, it's only Bitcoin. Bitcoin is it. And, gold bugs are like, gold, no. And they almost look at Bitcoin almost like a threat to them, because it's just like they see this Bitcoin is trying to steal a bit of the gold thunder. And so they're trying to say, no, gold is real. It's a real thing. I can touch it. I can feel it. And, your Bitcoin is just a fantasy. But you actually have I think you can see both worlds. You're fairly objective about this thing, even though your career is in gold. So how do you compare the two assets, or the two things, gold versus Bitcoin? What do you see pros and cons, and how do you kind of analyze the two markets?
Well, let's start with gold. So I told you already that gold has no counterparty risk. Of course, if you put it in a vault by a vault operator, you have to trust the vault operator. But that's more or less, humans are social beings, so we don't exist in ourselves. We have also always cooperated in the economy, and so yeah, I don't really see that as a counterparty risk, although there can be a risk, of course, if you put your gold in a vault. But gold has no counterparty risk. It can't be printed. It's completely independent of the financial world, but also of humans, because it's just a physical element. Nobody can change it. They try to create it now in this how do you call CERN, the lab in Switzerland, where they do tests with physics. Anyway, if you throw a few $1 trillion at it, you can produce one radioactive atom of gold. It's not really worth it. Anyway, so I'll keep it short. Now, gold has a very long track record, and will probably also, if you look at, for example, central banks have a lot of physical gold in their vaults, not Bitcoin, not silver, not anything else. Gold is the backstop of the financial monetary system. It hasn't changed since 1971 in terms of the asset of last resort, the ultimate store of value. We've done some experiments, and it's much of it is about psychology, but it's still there, at Fort Knox and other places. So if you go into a storm, and we are about to go into a storm, a very severe depression, what do you choose as for tools to survive the storm? You choose the tools of which you are certain that work, because they have worked for thousands of years. So gold will do that. But you can also bring some new tools like Bitcoin, which is different. It's digital, so you can store it yourself. You don't need a vault for it, but you can lose your password, and that will be a bitch. Sorry for my French. But you can transfer unlimited amounts of value to the other side of the world without a bank or a government in between. You can just remember a few passwords in your head. You can step on a plane, come out in Australia, download some stuff, and have your value again. I mean, it's incredible, right? So I think they both have their pros and cons. But to put just numbers on it, I would put more value, or I have more. I already told you I don't have Bitcoin, but if I could have done it all over again, I would put more value in gold, because for sure that it will preserve its purchasing power, and I put a little bit less in Bitcoin, because it's more speculative, and you just don't know what's going to happen to it. And maybe the value would go to zero, because Ethereum or IOTA comes up and has more, I don't know, use value, and you don't know. So that is basically the pros and cons how I see Bitcoin and gold.
Would you say 80-20 would be a good ratio?
Yeah.
80% gold, 20% Bitcoin, something like that?
Yeah, if you would ask me, I would say yes. Yes,
Mm.
I don't feel comfortable being a financial advisor,
Sure.
because I'm a researcher, but yeah,
Mm.
that would make sense. Yeah,
Okay.
just the amount of money you put in Bitcoin, make sure you can lose it, right?
Right.
It wouldn't be the end of the world if you lose it.
Right. Where do you think the price of gold and Bitcoin is going to go in the 2020s? Because you kind of alluded to the fact that we're kind of on the threshold of a depression, and this should bode
Yeah.
well for at least gold for sure. I mean, historically, gold has a long track record of doing well in depressions. Bitcoin, we
Yeah.
haven't really, it was created during the financial crisis, but the financial crisis was more or less kind of over by the time Bitcoin really started getting traction.
Hmm.
And so it hasn't, this is really the first, assuming we go into some sort of big depression, this is really going to be the first test to see how Bitcoin does in a real crisis.
Yeah, yeah. So what we're entering is a depression, and what will happen is that there will be a lot of unemployment, and a lot of company bankruptcies, which will set in. There will be a domino effect of the economy collapsing. It also means that a lot of people have to default on their debt, and and stock markets of course will go down, and bonds will default, and the government will, the Federal Reserve will print more money. Um, so there are two reasons why gold is going up. First of all, the risk of default. All these financial assets can default, stocks, bonds, etc. And gold doesn't. So people rush to gold because that's a safe haven, and gold is inflation proof. So no matter how much money the Federal Reserve will print, gold will preserve its purchasing power.
Mhm.
So I think gold will go up, and I haven't made my own models to predict the gold price, but I think it's fair to say it will go to $3,000 or something by next year. And what Bitcoin will do, I have no idea. We'll have to see. The halvening, they call it, is in May, right?
May 11th of 2020. That's right.
Yeah, yeah, of 2020. Now, I think it can also, it doesn't have to happen in that month. It can
Correct.
also happen a few months later. But
Historically, it always has had a delay of at least 60 days, usually, I think,
okay,
before it
right,
actually
yeah,
starts. Because I
yeah.
think what happens is the moment the halving happens, the miners are kind of screwed because they're getting half the reward. And so
Hmm.
there's a consolidation period where they're kind of, the
All right,
weak miners kind of drop out and then the strong miners try to stay in. And so it takes a few weeks, if not a couple of months before that process. We've only had two halvings in history. So it's not like
really?
you can draw a long correlation here on two data points and assume that's going to happen again. But we can say for certain in the only two halvings that have happened so far, it took a couple of months for Bitcoin to then suddenly consolidate and start rising up
Right.
like
Okay, I
violent.
thought it had more halvenings, but
No,
or halvings. That would be correct
there's
English.
two pronunciations. I usually
Yeah,
say having because it's half, but
yeah.
I've heard this Tim Draper, who's a billionaire, is he said havening, and he's the guy. Tim Draper is the guy who bought a bunch of Bitcoin for $19 million. It was confiscated Bitcoin that the U.S. government had confiscated from a legal Silk Road trader, and he
Right.
bought it, and I think he's done very well.
Yeah, yeah, yeah,
He bought it roughly around the same similar time frame that you were buying it. I don't know how much
yeah.
Bitcoin was worth there. It was probably a few $100.
Yeah, I like those Bitcoin terms like hodl and
Right.
happening, and
It's a
it's
whole new
quite
vocabulary.
yeah, it's quite
So I was
enjoyable.
predicting that that gold was going to hit 5,000 in this decade. So it sounds like you're thinking that's quite reachable.
I think it's reachable. Yeah, yeah. I also think we're going back to a, let's say, you must have heard of the term gold standard, but there have
Yes.
actually been a lot of gold standards. You have the classical gold standard. We have the gold exchange standard, the gold coin standard, Bretton Woods. You have a lot of ways to incorporate gold into the financial system, and I actually think that we'll go to a new gold standard, but I don't know for sure how it's going to look like. So I think gold will go up drastically. In the short term, though, I would like to add that it can be very volatile as well, because gold has a lot to do with inflation, and the beginning now of the depression is very deflationary, right? If aggregate demand in the economy drops, nobody can spend money on beer or on shopping, so that's very deflationary. Prices will drop at first, and then the Federal Reserve will step in to create even more money, whatever is necessary, to boost inflation. What we'll also likely to see is straight out currency devaluations, like the Roosevelt did in 1933, just devalued the dollar by, I believe, 41%. That can happen again, and gold long term will do well. And Bitcoin is not my expertise, but it's very exciting to look at the happening.
Right. No, it's true. Um, Now, one thing, there's a monkey wrench that's way down the road for us that's going to potentially disrupt the entire gold market. And it's not going to be in your lifetime or my lifetime. Um, and it's the fact that there's asteroids out there. There's the Psyche 16 asteroid that's orbiting between Mars and Jupiter. And people who are listening to this are probably thinking I'm absolutely crazy, but it's true. It's this asteroid of metal, and the NASA is going to be visiting it in 2026, 6 years away. And when they do, they're just going to be kind of flying around and checking it out and getting a good sense. But from all indications, it has, in today's market value, I mean, trillions and trillions and quadrillions of values in metals stuck on that asteroid. Quadrillions. Now, obviously, it's not actually worth quadrillion, because if that asteroid were to come to the United States, or sorry, to the world, it would flood and depress all those prices. Mm-hmm. So just speaking philosophically, Jan, between us, obviously it's not this won't happen until the end of the century, probably, till they actually mine it and bring it. But wouldn't that, in fact, be the first time in gold's history where the stock to flow ratio gets completely out of whack, and the entire market of gold gets utterly disrupted and breaks a 6,000-year trend line?
No, it would be at least the second time, because it happened previously when Christopher Columbus traveled to the Americas and found America. And he quite soon, the Spanish actually brought a lot of gold and silver home from Mexico. And that was the stock to flow changed dramatically. Not that I know the numbers by head, but I know there was a lot of inflation because so much gold and silver was coming in, that inflation was extraordinarily high for those times. And they used gold and silver a lot to buy spices and silk from China and India. But that was the first, so to say, asteroid that they found. These things can happen. Of course, it all has to do with, does it make economic sense to get those? Are there also minerals or just metals?
I think it's just metals, but I could be wrong.
Metals, right. So, for example, by the way, there are also trillions and trillions of tons of gold at the core of the Earth. Did you know that? At the core of the Earth,
right?
There's a lot of gold there,
right?
But you can't get it. You can't get it out, right?
Right.
So maybe we can mine those asteroids, but maybe if just let's talk in dollar terms to keep it simple, it takes $5 billion to get 1 ounce of gold back to the Earth.
Right.
Doesn't make sense.
Right. Of course.
So maybe I'm just thinking out loud. There's also a lot of gold at the bottom of the sea. You know, at 10 kilometers depth, there is a lot of gold, but doesn't make any economic sense yet to reach that gold. But this is the beauty of gold. If the price rises and, it becomes profitable, we go to the bottom of the sea and get some new mine supply. And if the gold price rises some more, and if technology develops, because in terms of purchasing power of gold, what's also important is the development and the, let's say, the efficiency, how we can mine gold. So maybe, Elon Musk develops some spaceships and we can very easily go to the asteroid, to Psyche 16, and get it. And maybe all these things at the bottom of the sea and on asteroids will just keep the stock to flow ratio around 65, where it has been for a long time.
Right.
We don't know. At the moment, I know it's very expensive to get some gold. Gold is heavy, to get some gold from an asteroid. So I don't really see it as a threat. But of course, if we can build really big spaceships and go there, it might be a problem. But it can also be that we have then by that time like 20 or 40 billion people living on this planet, and we have also colonized Mars and whatever. And I don't know, but these are just some of my thoughts.
Yeah, interesting. I was thinking that I was just imagining a spaceship going out there, because even though gold is quite heavy in space, but in the asteroid belt, it's basically weightless. Effectively, I mean, it's not weightless, but it's a lot easier to move it than if you had to move tons and tons of gold on Earth, because there's not the gravity that you're fighting as dramatically. So pulling it to the Earth, dragging it, kind of like dragging, let's say, an iceberg from Antarctica to bring fresh water somewhere, is not that hard. But it would just be, I was just trying to imagine, there's no way you could land with that gold. You would have to drop it with parachutes, because it would be so heavy, and there would have to be incredible parachutes. I think maybe you would just maybe not even try to put a parachute on, and just have it fall in the Gulf of Mexico, or maybe the Gulf of up there in what's it called? The Baltic Sea, someplace that doesn't have a very deep ocean.
Yeah.
So you let the gold, tons and tons, rain from the sky and create this huge,
I'm going
waves
to,
like a
I
tsunami.
will be there.
And then you let the gold sink to the bottom of the ocean, but in the Gulf of Mexico, it's not that deep. So therefore you can go down and retrieve that gold, because trying to, like, the amount of fuel that you would have to like give it a nice landing, and so that it doesn't like it lands perfectly well on land, you would have to use so much fuel, because the damn thing, you would want to maximize. Anyway, I was just trying to visualize this thing.
It's very very interesting thoughts actually, because what you say, if you reach the asteroid, getting off the asteroid wouldn't take a lot of energy because you're in space
Yeah.
probably. We don't,
Yeah. Yeah.
maybe the asteroid has a little bit of gravity. I don't know, but I don't
Yeah.
think so.
It's
But
it's negligible compared to trying to land that asteroid softly on the Earth, or at least a portion
well,
of the asteroid.
well, think about getting gold to the asteroid. That would be a bitch.
Impossible. Impossible.
I would send Bitcoin. Yeah.
Yeah,
No,
exactly right.
but yeah, no, but yeah, you're right. Maybe they will bring it, but also space, right? You need space in the spaceship. A ton of gold. I mean, gold is very dense, but already a ton of gold is like, it's a pretty big pile. I don't know if there's a lot of space in spaceships
I
actually,
would think
but
they would just lasso it and drag it and just pull it like they pull an
yeah,
iceberg in
okay,
Antarctica.
yeah,
You just
all
kind of like,
right,
you carve off a chunk with lasers or whatever you're doing, or with pickaxes or modern pickaxes. You
yeah.
carve it out, you put a rope around it, and you just pull it along with your spaceship, and you just drag it across space. And it takes a couple of years. It's taking 3 years to get there on a spaceship. 3 years. So it would take 3 years to come back. And then, but the challenge, of course, is it's easy to put it in Earth orbit, and you have it in Earth orbit, but then obviously that's not going to do any good. You need to bring it to Earth. And that's where I'm talking about, like, how do you make it land safely on Earth, this extremely heavy object? Because the more you can bring, the better for you, because you don't want to just bring like 1 ton of gold. You want to bring like 100 tons of gold. You want to bring a lot of gold, um, or thousands of tons of gold. But of course, then it would bring down the entire market, because of the supply and demand just goes completely out of whack. Anyway, crazy
Well,
thoughts.
I think it's very no. I don't think it's crazy thoughts. I mean, you gave this a lot more thought than I did, and I think it's very. Those are some pretty good ideas to, you don't need a big spaceship. You just go there, you invent something to cut very large chunks of gold off and bring it back, and then you can really get thousands and thousands of tons maybe on the planet. I mean, I don't think it's much of a problem to just throw it through the to the orbit realm, how do
through,
you call it?
through the
Atmosphere, and
atmosphere.
just hit it in the sea and whatever. I mean, it's gold. We'll find it. Whatever. And no, but what is also interesting is that concerning the stock to flow ratio is that at this point, this year there will be 3,300 tons of gold being mined. That is more than ever. So if we bring these large chunks of gold from Psyche 16, maybe it's just how it always has been. We just keep increasing the amount of gold being mined because there are more people, the economy gets expanded, and but it's still maybe it's also so much that the value of gold will go down. I don't really know, but
Well, it would have to go down, at least temporarily. It would have to, just because the supply gets, you inundate the market with supply, that it just,
yeah,
let's
but
say if you
not,
magically doubled the supply of gold, then it just would have to bring the price down, at least temporarily.
yeah, of course. But look at what now like I just said, we mine 3,000 tons per year.
Hmm.
And this is very, I can send you an article I wrote about this. What's being mined every year doesn't matter for the price of gold. The mining supply
Hmm.
is not, it doesn't have any impact on the price of gold. What sets the price of gold is supply and demand in above ground stock. So the stock is much more important than the stock to flow ratio or the flow. It's about the stock.
Do you think that Bitcoin would become a reserve currency in the same way that gold is a reserve in many banks in the world?
No,
Okay.
no,
All
no,
right.
I don't think so.
Okay. And then number two is, what do people, for the storage fees, do you think, is it about 1% of your value? Let's say I buy $1,000 of gold. What would I be expect to pay for an annual like upkeep of the vault? Is it 1% of it, of the value?
Yeah, it's our company is 1%.
Okay.
That's a little bit more than a few others because we have our own vaults.
Hmm.
It's usually in between 0.5% and 1%.
Got it.
So
Okay.
and some companies have some advantages and or some disadvantages. We have our own vault, so at this point we're a bit more expensive in terms of storage fees.
Hmm.
Maybe if we grow a lot, it will go down. That I
Got it.
don't know actually, but yeah, it's usually in between half a percent and 1%.
Last question. How do they find out more about you and your company?
Oh, you can go to Voima Gold and look on the Insights tab, and you can read there my latest articles, or go to Twitter, Jan Nieuwenhuis, or at @jangold_.
Wonderful. Jan, it's been a big pleasure. Thank you so much for your insight, and everything. So I wish you the best, and keep in touch.